Hey everybody, we're back at it, and this time I want to talk to you about key ways that construction contractors can grow their business, focusing on cash flow, relationships, project management, and a few more things that we're going to get into right now. My name is Scott Peper. I'm the CEO and founder of Mobilization Funding, and for the last 10 and a half years, we've been helping businesses side by side grow their businesses through either financing, our relationships, and looking to ways we can help them by connecting to the right people. And today, I want to go through these items with you so you can do the same thing. First and foremost, cash flow is the number one thing to focus on in a construction contracting business. Whether you're in the early phases, just starting out, or you're managing a $100 million portfolio, cash flow is critical just like any other business, but even more so in construction. So the ways in which you track it, manage it, and understand it literally are the difference between being successful and comfortable in your business or uncomfortable and unsuccessful. You're probably never going to be totally comfortable, if I'm being honest, but when you have command of your cash flow, you know you're growing, you know you have the cash to execute your plan, and you can create strategies around it. So let's dive into the first thing, project management. A good project manager in your business is vital. We all know there's a problem with the labor force today, and it's harder and harder to find great talent in construction. So project management is even more critical today, despite the fact that there's less people to do it. But in your business, I'm sure you have project managers now, and making sure that you're working closely with them and making sure you're arming them with where your cash flow is for that specific project, what the plan for that cash flow is on that project, and how that project is being executed by them. Where does that show up? It shows up in things like, when do I order materials? Can I put 2 crews out on the project to start? Can I add a crew? Can I have overtime? What happens if I do keep overtime? What if I get asked to do something extra and I need to order extra material? Does that jam up the project? No, actually, it probably makes the project run a lot smoother, but it might jam up your business's cash flow. And if you jam up your business's cash flow, it might jam up the project next week or 2 weeks later. It's critical to make sure that your accounting team, your leadership team is working with your project managers so they know that the decisions they're executing in the field and that feedback and information that's happening in the field is getting back and forth, and that communication channel is wide open so that you never have any surprises, they never have any surprises on the project, and they can manage that project and the execution and performance of it, because performance is the number one thing that you should be focused on outside of cash flow in your business. If you perform, you're going to build great relationships. If you perform, you're going to manage your schedule and execute to your bid. If you perform, you'll make the profit that you estimated. If you don't perform, you'll never get to the end of the project. You'll constantly be looking for new relationships and new projects, and your business will feel like you're always going from home plate to first base instead of lapping the bases. The next phase we've already touched on is client relationships and cash flow. So let's get to some things that you can help manage cash flow as it relates to your specific project. And I think one of the key, most focused areas that you can control that gets not as much attention as it should is your schedule of values. Why? Well, your schedule of values is going to dictate exactly how you can exactly how you can invoice your project. When you start out with your bid process and you're collecting your costs and you're estimating your schedule and you're estimating the costs to complete and costs to execute the schedule, and then you're adding in your margin, creating profit, and then you submit your final price, what's really important is in order to capture the profit that you've now put in your bid, it's very critical to make sure that as you're doing work completed, you can invoice and collect as much as possible for every piece of work complete or every percentage of work complete. I use a great example, and I'll give it to you here. We had a client who was executing an apartment remodel that was turning from apartments to condos. And this particular client had organized their schedule of values where they were blocks of rooms. Picture a 5-story apartment complex, and the east wing had 5 rooms, the west wing of each floor had 5 rooms, and the way they set up the schedule of values is a certain price per floor per wing. So you had, once you were complete with the east wing, you could invoice. Once you were complete with the west wing, you could invoice. Imagine this. Other trades got behind, other trades had issues, which delayed their ability to complete and finish. And so what happened was they had 90% of the work complete on just about every east wing and west wing, but they couldn't bill for it because they didn't set up their schedule of values in a manner that was going to allow them to execute. Now, that's not the general contractor's fault either, because the general contractor wanted to invoice for those. They set their schedule of values to bill the owner up in a way that was allowing them to bill per phase, per unit, instead of just one wing. And so creating a schedule of values and spending the time doing that in your bid process so you can analyze the schedule you're trying to keep and the way in which you're going to be able to invoice that project is really critical. Spend the time doing it in the bid phase with your project management so that if and when you do create and win that bid, you have an estimation of where you're going to land on that schedule of values as you start to win the bid, win the job, and then start to deliver on it. And then start to build the schedule of values and deliver on it to the general contractor. So why is all of that important, and why am I talking about client relationships? Well, a lot of times the easy button is client relationships. Let's go golfing, let's go fishing, we're friends. Great, all that is critical. But you know what those clients want more than anything? They don't want to have a best friend, they don't want a fishing buddy, and they definitely don't need another person who's going to take them somewhere. But they like those things if and after you perform. So build your reputation as being one badass who, when you show up on a project, you are going to deliver what you're there to do, and that no one else has anything to worry about, because when you're there, this job's getting done. If you're an electrician, you're the best damn electrician anyone's ever saw. How do they measure that? Because you get your shit done. You're good to work with. Other trades like you. Your stuff's clean. You're on time. You leave everything better than you touched it, and go through every trade the same exact way. Regardless of who you are, regardless, you're a problem solver. You are someone that they don't need to worry about. You're someone that they know, I'm going to hire this person and I have to worry about the other folks, but I do not need to worry about them. You do all that, you're going to get great client relationships. You're going to get repeat business. Everyone talks about relationships, and the same goes for your suppliers. Manage your supplier relationships. Communicate to them, because the relationships are key. But they're key because you don't need to be going project after project, transaction after transaction in your business. That is exhausting. Now, why do I say that? You're like, yeah, I can only do one project at a time. And you're right, you can. However, there's a big difference between doing your second, third, fourth, fifth, 15th project with the same customer than there is the first one. And if you get on a job and you nail it and you do great work and you perform and you're less stressful and your work is clean and you pick up after yourself and you make everybody else better, you know what? When they call for that 4th, 5th, 6th, 10th, 15th project, it's not as hard as the first one. When you think transactionally and you stumble onto a project and you go to it without doing the things I just mentioned, you're going to continually be doing first projects. And first projects and the mentality that goes along with those are very difficult compared to the 10th project with the same customer. And so that is how you build those client relationships. Now, if you're cool and you like each other and you want to go fishing or you want to take somebody to a game, by all means, do it. But don't do that thinking that's the relationship. The relationship is the performance. The relationship is you doing what you set out to do. If you can be friends on top of that, even better. But it's not the most important thing. All right, next topic. Diversify your revenue streams. Everyone talks about that. What does that mean in construction? Well, to me, it means you have a commercial contracting business, but you also do a little residential work. You have a commercial contracting business that goes after projects and bigger ones, but you also have some industrial service side of your work that you do. Things that bring in the cash flow. If you have all of your revenue in the same exact cash flow cycle, meaning let's just assume you do larger projects in the commercial trade. That means your revenue is going to come in, you're going to invoice once a month, and you're going to get paid once a month. Well, what would be nice is if you had some master service agreements or you want to diversify your revenue a little bit, maybe you do things that are purchase order based that are 1 month jobs or 45-day jobs instead of all 6-month jobs. Something that turns cash a little quicker. You don't need as much cash to do it. And just to cover your overhead, cover your bases, you get cash moving through your business a little more. To me, that's one of the best ways to diversify your revenue in a construction project, in a construction business. I think a lot of people think about diversifying revenue and they try to start different businesses. Maybe there's ways to vertically integrate your business. We talked to a directional drilling company, and we have multiple directional drilling companies in our portfolio and customers of ours. One of the things they did is they created a locate company. Why? Getting your locates done for gas lines, power lines, other lines that are in the ground before you drill is an obstacle. If you have to rely on those locate companies to come out and you're paying them, that can be a hurdle. It's a great place to vertically integrate your business. If you created a business, you hired a crew to do your locates for you, and then you build separately for those locates, that's a great way for you to kind of diversify your income stream and be able to manage a little bit faster flow of dollars into your business while also protecting a key pivotal piece of your schedule and maintaining it. To me, that's diversifying your revenue cycle in the construction business. Adding a little service line, finding a little piece of service that you can do that vertically integrates, specifically if it can help you streamline your system. And last part of cash flow to help your business is financing. Do you need financing? Do you have financing? Do you want financing? What type of financing? There's so many different ways to think about it. Some financing might just be, I'm going to leave all the cash I got in my business and I'm going to use my own cash to finance my projects. Financing does not mean if you have to have a bank or some type of lender. Financing just means, where am I getting the cash from to execute the work that I need? Do I have enough cash to do the work I need on the schedule I want to keep in the manner in which I want to do it? That's all you really need to know. And if you're running a good business and you have lots of cash in your business and you can finance your own projects, or you've created such a method with the supplier terms you have and how fast you can invoice and are paid that you don't need to do any type of financing from a lender, great. You're still financing your work, you're still financing your business, and you've done the work and the thought to do it. Now, if you have that same exact information available to you and you know what you need to finance, but you also now know, you know what? I'm growing. I don't have all that cash in my business. I can't stretch my credit or my suppliers anymore. And now you're starting to look for a lending source, or maybe a partner, or maybe an equity transaction of some kind. Here's what you need to think of next. What is the best source of capital for me to be able to do what I want to do as if I had the money in my own business? And once you figure those things out, you'll be able to find the right lender, or decide between lender or raise an equity partner, and extrapolating out where you're trying to get to from a 1 year, 2 year, 3 year basis, or just through that year. You don't want to raise $500,000 of equity and sell a piece of your business if that $500,000 is only going to get you through the next 6 or 8 months based on the projects you need. Because what are you going to do after that? Raise another $500,000 and another $500,000. Next thing you know, you're just giving away lots of your equity. So what you want to do is find a lender or a loan program that will allow you to at least make sure you get the amount of money you need. There's nothing worse than getting too much money, and there's definitely nothing worse than getting too little money for what you're trying to execute. So find the amount of money you need. Find the structure that's going to work for your cash flow. Everybody has a little bit different revenue cycle depending on your supplier terms, the type of projects you do. Do you get paid in 30 days, 45 days? Do some customers pay in 90 and some pay in 30? Whatever that blend is, it's very critical for you to find the right financing that can help you within your own cash flow cycle. Get the money available when you need it, pay it back as you're paid, so you can make sure you're not creating a loan program or taking out financing for yourself that actually makes your whole situation worse. There's nothing worse, and we've all been there in business. You have a cash need today, you get the cash. The hole is plugged. 1 month later, you have a bigger hole, and all you did was just kick the can down the road. Okay, that is a terrible feeling. It solves the immediate day problem, but it creates a bigger problem when that problem surfaces again a month later. When that happens to you, that's because you have the wrong structured type of finance. And I'll give you an easy way to figure this out. If you're in construction and you're paid once a month, and you can only invoice once a month, if you think you can take in money today and make daily or weekly payments to pay it back, you are sorely mistaken that you're not going to avoid some problems. If you're looking at daily or weekly loan programs to solve a construction financing problem that requires money today, just know 1, 2, 3 months from now, when that cash flow problem reoccurs to you, and it will, you're going to be in even hotter water, and it's going to feel even more stressful because you cannot make payments on a loan daily and weekly when you're only paid monthly. Cash flow is one, project management, relationships, diversifying your revenue stream, and focusing on the math. Keeping yourself organized, congruent, communicating between departments, that is the key. Remember, performance is the number one thing everybody cares about. You'll never make the profit you put on your bid sheet if you don't finish the job. You'll never make all the profit on your bid sheet if you don't finish the job well. And the key to doing all those things is understanding your cash flow. Remember, when you perform, that's what your client wants. That's the way to build the client relationship first. Sure, go golfing, go fishing, shoot clays, do anything that anyone wants to do to get some rapport, maybe to get an option, an offer, but that doesn't mean you have a relationship. The relationship is started, created, and most importantly, cemented in place when you do great work and they can count on you. I hope this helped you all. I hope you can share this to people that might need to hear it. I hope that you will do me a favor and pass this information on to anyone and yourself. Use it. It's great info. It's going to help you succeed, and that's what I want to see you do. Take care, and God bless you.